Welcome to Peak Oil News for August 19th, 2022. In our first story, last episode, I mentioned that it seemed to me that governments across the globe were deciding to keep oil prices artificially low through strategic petroleum reserve releases that we might later pay for through hunger. In general, I was discussing concerns over the cost of transporting food once the SPR release had been spent on vacation travel and hot dogs, so that come fall, gas would become so scarce that it would make it untenable for truckers to deliver food at reasonable prices. Well, the connection between energy and food is made clear on another vector in this article on oilprice.com, in which they discuss how land being used for energy generation is being sacrificed at the price of agriculture. Earlier in the summer, Bloomberg reported that the CCP was mulling over the idea of banning solar panels from farmland because it was threatening food security in that country. It appears that further research is demonstrating that more and more countries will soon have to decide whether their green energy goals are more important than an adequate food supply. The fact is that so-called renewable energy has quite a large footprint when it comes to land usage, and this is particularly true with solar, that needs the same sun favorable for growing crops. One paper looking at the problem in Europe and how much land it would require to provide its energy needs through solar and wind energy found that people in the UK, for example, required about 1.25 watts per square meter. This is exactly the same as the energy density provided by solar, meaning you could generate all of the electrical energy England needed by solar energy. You would just need to then duplicate the continent to provide space for food production as well as everything else. Wind energy does not create this problem as severely because it does not compete directly with crops for sunlight like solar panels do. Wind energy does kill a lot of birds though. All right, in our second story, looks like Mexico is going to start exporting LNG, even though it has to import the bulk of what it uses domestically. How can such a natural gas poor country export it? Because of pipelines crossing the U.S.-Mexican border. There are more than a dozen gas pipelines crossing the U.S.-Mexico border, most of which were built under the previous Mexican administration. They can deliver up to 14 billion cubic feet a day. However, the contracts for gas delivery were set up in such a way that the full price of full capacity must be paid no matter what the demand is, called a take-or-pay contract. And since Mexico is only getting 6.7 billion tons a day due to a shortage of in-country pipelines to remote generator plants in the central and southern part of the country, this means they are having to pay for gas they can't currently use. Building pipelines to coastal LNG export plants will provide them a wider market. And since the U.S. is having a difficult time building more LNG export plants on the West Coast because of environmental concerns, Mexico is stepping up to do the job. Europe and Asia both are seeing natural gas prices surge over the last 2 weeks as temperatures soar. A total of 8 liquefied natural gas export terminals are proposed that will have the capacity to export 50.2 million tons of gas. This will make Mexico the 4th largest exporter of LNG, with some operations starting by the end of next year. Most of these export terminals will be on the Pacific side and therefore are designed to feed the growing demand for natural gas in Asian markets. Our third story. And before you think peak oil means it's time to go out and invest in energy companies, look at what is happening to Uniper, the German energy giant. They have lost $12.5 billion in the first half of 2022 and are currently facing insolvency. The losses came as Russia cut flows through European pipelines and forced the company to buy natural gas on the spot market. The company has seen its stock price drop 80% since the start of the year. We at Uniper have de facto become a pawn in this conflict, said one company spokesman. The government of Germany is currently working on a $15 billion bailout agreement and is working on a plan that will see the German government take over a 30% share in the company, helping lead to another private energy company move towards nationalization, a trend I suspect we will continue to see in the coming years. Well, that's it for today, folks. Thanks for watching. If you got value out of this video, please hit the like button. Stay strong and see you soon.